Hi everybody. In this video, I will show you a past year mid-semester test question and how to answer this question. The question is like this. You can see this question here. The question gives you a trial balance of a sole proprietorship business, and this is a service business. You can see here, this is the trial balance. Okay, the first thing that you can see is the cash and debtors, supplies, prepaid insurance, land, building, accumulated depreciation for the building. Office equipment is a non-current asset, and then the next account is accumulated depreciation for the office equipment, and then you can see the creditors, long-term loan, capital, drawings, service revenue, utility expense, salaries and wages expense, advertising expenses, and general expense. So the total in the debit side is 1,124,300. The same number you can see in the total in the credit side. Okay, so see here the additional information. As at 31st of December 2015, this is a question from a mid-semester test in year 2015. So see here, there are 1, 2, 3, 4, 5 additional information. So most of the time, for every additional information, you have to do at least one adjusting entry. We will do this. Okay, see here, this kind of question typically will ask you to firstly do the adjusting entries. You have seen that the question in the question you can see that the business already have the trial balance. So according to the accounting cycle, the next step after preparing a trial balance is to do the adjusting entries. That's why this question asks you to do adjusting entries. After that, most of the time the question will ask you to do the next step in the accounting cycle. So in this question, the question asks you to do or to prepare an income statement. If you see the accounting cycle, after adjusting entries, you have to do an adjusted or to prepare an adjusted trial balance. And after doing the adjusted trial balance, you have to do the income statement and then the balance sheet. But this question does not ask you to prepare the adjusted trial balance. After you do the adjusted entries, the question asks you to prepare the income statement and balance sheet. But when you want to prepare the income statement and balance sheet, you have to prepare the adjusted entries. You have to prepare the adjusted trial balance first. So it means that you have to prepare the adjusted trial balance in a rough paper or something. You don't have to show that in your answer. There is no other way. After adjusted entries, you have to prepare the adjusted trial balance, and after that you can prepare the income statement and balance sheet. Okay, we focus on doing the adjusted entries. I will show you. This is very important. You have to do the adjusted entries correctly, and then after that you can do the adjusted trial balance, and you can prepare the income statement and balance sheet. If you do something wrong in these adjusted entries, then then you will not get a correct income statement and balance sheet. So let's see. So you have seen the income statement here. I have shared with you this question before. Okay, see. Information 1. Prepaid insurance balance referred to a 2 years insurance policy effective 1st of July 2015 to 30th of June 2017. So using this additional information, you have to do the adjusted entry. So remember the purpose of doing adjusted entries. The main purpose of doing adjusted entries is to follow matching principle. The matching principle says to calculate profit for one accounting year, you have to match revenue for that year and expenses for that year. So here, the insurance is an expense. So when you see the term insurance here, you have to calculate the insurance expense for the year 2015. So check here. You see here the prepaid insurance here is $12,000, and then the information says that $12,000 is for 2 years insurance policy. So if the insurance policy $12,000 is for 2 years, how much is the insurance expense for 1 month? Insurance expense for 1 month is $500. Why? $12,000 divided by 24 months. So 1 month insurance expense is $500. And then the next thing is, how many months has passed in year 2015? Or how many months the insurance has been used in year 2015? So the insurance effective starting from 1st of July 2015. So the account is closed at 31st of December. So how many months has passed? 6 months has passed. 6 months has passed. The insurance expense is $500 per month. So 6 months, $500 times 6 equal to $3,000. So from the $12,000 prepaid insurance, $3,000 has become an insurance expense. So how to do the adjusted entry? To do the adjusted entry, you have to record the insurance expense. Okay, the adjusted entry for this information number 1 is the date is 31st of December 2015. You debit the insurance expense account 3,000, and then you credit prepaid insurance 3,000. You debit insurance expense 3,000 because the insurance expense has increased from 0 to 3,000. So that's why you debit. And then you credit the prepaid insurance 3,000 because the asset prepaid insurance has decreased by 3,000. Before this, the prepaid insurance asset is 12,000. At the end of year 2015, 3,000 has becomes an expense. So the prepaid decrease. The prepaid insurance decreased by 3,000. That's why you credit. Prepaid insurance is an asset. When asset decrease, you credit. I will show you the answer at the end of this video. So you will see you have to debit the insurance expense 3,000, credit prepaid insurance 3,000. Okay, information number 2. Unused supplies at the end of 31st of December 2015 total 63,500. Okay, when you see the term supplies, you know that this is you have to do adjusting entries for supplies. Okay, for supplies, when you want to do the adjusted entries, the first thing that you have to do is to calculate how much supplies has been used. how much supplies have been used during the accounting year. So how to calculate the supplies used? See here, account supplies in the trial balance, supplies, okay, you can see there in the trial balance, the supplies is 80,300. That is the balance of account supplies, 80,300. And then in the account 80,300, when the business check at the end of the year, 63,500 supplies have not been used yet. So during the year, how much supplies have been used? The beginning balance is 80,300. At the end of the year, the balance is 63,500. So supplies used is 80,300 minus 63,500 equal to 16,800. If you use calculator, you will find the answer is 16,800. So you know that during the year, $16,800 of supplies have been used. So the adjusted entry for supplies is very easy. The supplies used has to be recorded as an expense. When a business uses the supplies, it becomes an expense. So the adjusted entry for information number 2 is debit supplies expense 16,800, credit supplies 16,800. You debit supplies expense because when expense increases, you debit. And then you credit the account supplies because asset supplies decrease. When an asset decreases, you credit. The asset supplies decreases because the business has used 16,800 supplies when the business providing the services. So the adjusted entry is debit supplies expense 16,800, credit supplies 16,800. Okay, number 3. Information number 3. $300 utilities charges for December 2015 have not been paid and has not been recorded. So when the transaction has not been recorded yet, you have to record the transaction. Okay, now see, $300 utilities charges for December. So remember the matching principle and revenue recognition principle, and also principle for expenses. You record the revenue and expenses when they happen. So this $300 happened in year 2015. So you have to record it in year 2015, even though the $300 will be paid in the next accounting year. Have not been paid yet. Will be paid later. So but still you have to record the expense in year 2015 because it happened in year 2015. So adjusted entry for this is debit utility expense $300, credit utilities payable $300. You credit utilities payable $300 because it is a liability. Why it is a liability? Because the business has to pay $300 in the future. So it is like the business owes somebody $300. So that's why you credit account utilities payable. When you see the term payable, it means it is a liability. You can see the answer at the end of this video. Okay, number 4. The business paid in cash for an advertisement expense of $1,300. at December 30th for the advertisement that will appear in newspaper at January 5th, 2016. This transaction is still unrecorded. See here, what happened here? The thing that happened here is the business pay $1,300 expense that will happen in the next year. So the question that you have to ask yourself is, this advertising expense is an expense for the year 2015 or 16? The answer is, it is an expense for year 2016, because the advertisement will appear in newspaper in January 5th, 2016. You record the expense when it happened. Even though the business pay this in year 2015, but the advertisement will appear in newspaper in year 2016. So how to record this transaction? So to record this transaction, first you have to record the cash out. The cash out happened in year 2015. So the date is 31st of December 2015. You record the cash out. So credit account cash $1,300. What is the account that you have to debit? You have to debit account prepaid advertisement. The amount is $1,300. Account prepaid advertisement is an asset account. You cannot debit account advertisement expense. No, because I have told you the expense is for the year 2016 expense. In year 2015, the business pay. So cash out or credit cash 1,300, but you have to debit account prepaid advertisement. Account prepaid advertisement is a prepaid expense account, and it is an asset. Why it is an asset? Because the business will get benefit in the future, in the next year. The business pay 1,300 today, cash out today, but the business will get the benefit in the future. What is the benefit? The benefit is the advertisement will appear in the newspaper in the future, in the next year. So the answer or the adjusted entry for this is debit prepaid advertisement 1,300, credit cash 1,300. Okay, number 5. Like I said earlier, you can see the written answer at the end of this video. Number 5. Okay, this number 5 information is related to depreciation expense. See here, office equipment was depreciated at 20% of the cost each year, while building was depreciated at 10% of the cost each year. So you have to check the trade balance here. You see how much is the office equipment? Office equipment value is $55,300. The question says the depreciation is 20% from this amount. So 20% times 55,300 equal to $11,060. Okay, that is for the office equipment. And then the question says for the building, the depreciation is 10% per year. So see here, the building value is 650,000. So 10% is 65,000. So there are two items. You have to record depreciation expense for office equipment 11,060, and the building is $65,000. So how to do the adjusted entry? Okay, you have to memorize this. You have to memorize the way to do adjusted entries for depreciation. The basic Entry is very easy. Debit depreciation expense, credit accumulated depreciation. So for this question, first, the adjusted entry for number 5 information is debit depreciation expense. The amount is 76,060, and you have to credit 2 accounts. First, you have to credit accumulated depreciation for office equipment. The amount is $11,060. And also you have to credit account accumulated depreciation for building. The amount is $65,000. You have to do several questions related to adjusting entries. After you do many questions, you will get the logic. This is very important. You have to do the adjusting entries correctly, and then you can do the adjusted trial balance, and you can prepare the income statement and balance sheet, etc. correctly. Okay, this is the answer for the adjusting entries question. Like I told you earlier, I will show you the journal entries. Okay, so see the first one. This is for information number 1. The answer is debit insurance expense 3,000, credit prepaid insurance 3,000. Then for information number 2, you calculate the surplus use. The surplus use is 16,800. Then the adjusted entries for supplies is like this. You debit account surplus expense, and then you credit account supplies 16,800. Information number 3. Remember you have seen that the business has received utility bill $300 but still unpaid. So the adjusting entry is debit utility expense. You have to record the expense because it happened in year 2015, and then you credit account utilities payable. Account utilities payable is a liability account. It shows that the business has not paid yet the utility. Okay, information number 4 is related to advertising or advertisement expense. The business has paid something related to advertisement 1,300, but the advertisement will appear next year. So the adjusting entry is you have to record the cash out. When there is a cash out or a decrease in cash, you credit account cash 1,300, and then the business pay the advertisement expense for the next year. So the business will get something in the future. So it is an asset. So in accounting, you record that in an account called prepaid expense. For this expense, it is the advertisement or advertising expense. So the account is debit prepaid advertising 1,300. And the last information is related to depreciation. Like I told you earlier, the adjusting entries for depreciation is straightforward. First, you have to debit the depreciation expense, and then you have to credit the accumulated depreciation account. For the question that we have discussed, there are 2 non-current assets. Office equipment, the depreciation expense is 11,060, and for the building, the depreciation expense is 65,000. So total these two accumulated depreciation is 76,060. So you have to record the adjusted entry is like this. You have to record the depreciation expense in one account only. So debit depreciation expense 76,060, credit the two accumulated depreciation accounts separately. Accumulated depreciation for office equipment 11,060, accumulated depreciation for building 65,000. Okay, just one more thing. If you check the trial balance of the business, you will see that there is another non-current asset. The non-current asset is land. But you have to know that in accounting, we will not depreciate land, because the assumption is land always increase in value over time. So that in accounting, we will not calculate depreciation expense for land. Thank you very much. This is the end of the video. Feel free to subscribe this YouTube channel so that you can watch future videos.